Welcome everyone, and welcome to my very first tutorial video. I've had a lot of feedback from you guys wondering how I analyze the markets, and I decided to make a whole tutorial series for you guys. And this will be the very first tutorial I'm going to do, and we're going to be looking at trends or trend analysis. So today we're going to be looking at the different types of trends we find in the market, how we approach those trends, and the time frames we use to look at trends. There's different time frames which may influence your decision. So without keeping you waiting, let's have a look. Oh, by the way, have you heard of Easy Properties?
Easy Properties is the newest investment opportunity offered by Easy Equities. If you guys are interested, just head over to the description. There is a link, and head over to the site. You can browse and read more about this investment opportunity, and if you are interested, just sign up. And you can also send your link to your friends, and the more that you get to sign up, you will move up the waiting queue. Thanks. So the first type of trend we have is what we call an uptrend. This is usually identified when the share price gradually increases over time, and you can notice that it always has higher highs and higher lows, and this is what we can now categorize as an uptrend. The second type of trend that we have is what we call a downtrend. This is the opposite of an uptrend, where you have lower highs and lower lows over time. And the third type of trend that we have is what we call the horizontal trend. So this trend doesn't gradually go up or down, it just goes from left to right. It does have the fluctuations, but you do not notice any higher highs, or you do not notice any higher lows. So we then consider this as a horizontal trend. So as a long-term investor, if you are interested in investing in a certain asset and you notice that there's been a gradual downtrend over time, this is not something you would be interested in. Let's say, for example, this was year 2000 and this was year 2020. You will notice that year on year there has been a gradual decrease, and you can expect the same thing for the future. The chances of you catching the trend change are quite slim, so it's best to just stay away from this type of investment. If you are a short-term investor, however, you then analyze the little fluctuations that happen in this downtrend, and you try and profit from these small rises. This is where short-term traders now buy and sell, anticipating these little fluctuations. As a long-term investor, this is something you would be more interested in, something that has a gradual increase over time. If you then compare this to the downtrend, and you say this was year 2000 and this was 2020, you know that over the years this investment has brought very good returns. Same as a short-term investor, you still have your fluctuations, and you can still profit from these rises, trying to buy in at the dips and making your profits from the increases. Obviously, as a long-term investor, one thing you'd want to avoid is getting in at a high, and rather getting in at a low, so that you can make your profits instantaneously. Now, looking at the horizontal trend, same thing. As a long-term investor, this is not something you would be interested in. This shows that from beginning of investment to the end of investment, it hasn't really brought much returns. Rather, you've just been risking your money and watching it fluctuate from time to time. As a short-term investor, you still have the same benefits. You still have your fluctuations. The only one thing you're hoping is that at the end of the fluctuation, it doesn't continue going down and turning into a downtrend. But this is something a short-term investor can invest in, but as a long-term investor, this is still something that you would not be interested in. Easy, right? Nope, it's not that easy, guys. Take great caution. Different time frames can give you different trend lines, so it's best that you change the time frame to confirm what the actual overall trend is. Let's have a look at practical examples so you can better understand this. Having a look at the Sasol share price, we can see that we have an uptrend, right? where we have higher highs and higher lows, and this is on a 1-day time frame. But should we change this to, let's say, 15 minutes, now we have a horizontal trend. So this is where you have to then decide which time frame you want to base your decision on, and then you can decide if you're investing or not. Let's have a look at another example. Here is another really good example. We're looking at Aspen Pharmacare on a 15-minute chart. It looks quite horizontal, and a short-term trader might think, okay, this is something I can probably make a profit from. Or even a long-term trader, they might think that, okay, perhaps I can expect a rise after this time frame here. And if we take a look back and we look at the bigger picture, we actually notice there's a gradual downtrend over a longer period of time. So this might influence your decision now, thinking I'm not going to get much as a long-term investor from this. And let's take a further step back, and we notice there's an uptrend. So this is something everyone should be very careful about. You might notice a trend, but have a bigger picture depending on how long you plan on investing in a certain fund to influence your decision. Only looking at one time frame can be very dangerous because you're not having the full view of what's happening on a particular stock. Now let's have a look at the last one, and now we're looking at Apple on a 15-minute time frame as well. Again, you have your volatile fluctuations, and this looks like a very horizontal trend. Apple is something a long-term investor would want to invest in, and we'll have a look why. So if we change this from 15 minutes to 1 week, and we have a look at the bigger picture, this is quite an amazing uptrend. As you can see, from 2005 we have had our gradual increases. Even though we had our dips, we always had higher lows, and we have our increases, and we have our increases, and we have our rallies up there. So this is what a long-term investor should look for, something that has a gradual increase over time, reducing the risk of the overall investment.
Okay guys, so that was my tutorial on trends and trend analysis. In my next tutorial, we'll be looking at support and resistance and how we can use this with trend analysis. So don't forget to like and subscribe, and watch out for the next tutorial. Peace.